Hello everyone and welcome to this morning's webinar. We're just waiting for the recording to start, which I see on my screen that it has. So we'll just crack on. But before we do, as usual, you should be able to see on your screen the disclaimer. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I see we have a mixture today. We've got, I know we've got some quantum users. I know we've got some education, some of our education students, and I think we've got some new people as well. But whatever your level of experience of trading, you are all very, very welcome. And just quickly run through this little slideshow. I know some of you have seen it before, but it's for the benefit of perhaps people who are here for the first time. This session and the two that we also do later on today, run by myself and my husband David, who's sitting next to me at the moment. And I see some lots of red, David, this morning again. Red is his favourite colour, and Liverpool won at the weekend as well, which is great. Right, we run these in tandem. We will look at the markets through the prism of volume price analysis. We look at the fundamentals, we look at what's happening in the related markets, and increasingly we also have to look at the political risks, which seems to be politics, seems to be driving the markets these days, and fundamentals really taking a sort of back seat, as it were. It's all explained, if you haven't come across the books before, up on Amazon. To do with Forex, we put together something called a complete Forex trading library. It is actually the digital version of the books where all is explained, and it's a $9.99. And I've had some lovely emails from people, traders, experienced and novice traders, who have said that the information and knowledge that's in the books has really opened their eyes. And looking at this market's not in one dimension, just through the prism, through technical analysis, but what we call three dimensions, and that's, as I said, the fundamental and related markets. But I suppose we should call it four dimensions. There is a fourth dimension, which is the politics, as you well know. And all this is actually covered in even greater detail in our Forex program, where this is a slide from the one of the thousands of slides that is on the program, and you can see really all these markets are interrelated. Forex is very much sitting at the center. It's the market that reacts the fastest to sentiment. It's the money. It's the money market. It's money flow, and money is always either seeking a return or it's seeking a safe haven. And that's what we do. We identify the sentiment. We identify the currencies that are moving, the currency pairs that are moving, and as traders, we then use that to our benefit. And this brings me neatly to the indicators, the quantum indicators. Everything we do is supported by our quantum indicators, developed by David and our team of developers. These are the Forex specific ones, which we bundle together in what we call the currency dashboard. You don't have to have all four of them. You can buy them all individually. The one that is almost there's no debate as to which one we would suggest you start with, and that is the currency strength indicator. And I'll show you a new workspace that I put together on my MT5 platform, just as a suggestion of how you can use these indicators along with VPA and multiple timeframes, and we'll just move to that once we get going. As I said, you can just buy one, you can buy a bundle, or we have a full package. All future indicators are issued free with the full package. So if you have the full package of indicators, our latest indicator was the pound index, which is automatically added to your package. 24/7 support, and all upgrades are included in the price. You have a 7-day money back guarantee. And these are the platforms that we currently support: MT45, NinjaTrader, TradingView, and we are now working on TradeStation. And you can actually switch from platform to platform. Not all of them are priced, the packages are priced identically the same. If you buy the package, there is a slight difference, because there are on some platforms there are slightly more indicators. But if you buy one, if you have a CSI, for example, or an MT4, then you want to go to when we have TradeStation, you simply switch to TradeStation. There is no additional cost involved. You can find the details of all the indicators at quantumtrading.com. And as I said, we now have a complete Forex trading program. It includes the full package of trading indicators. if you've bought anything and you want to move to the education, you will always get a credit for what you may have already purchased. And the program is really what it says. It really gives you the skill and all the knowledge you need to trade forex with confidence. And you can find more details at quantumtradingeducation.com. I'm just to get my charts up, and I'm going to pass to David to see if he's got anything he would like to add.
Thanks, darling, and a very warm welcome to you wherever you are in the world. It's morning here, but it may be afternoon, evening, or even middle of the night. So we do appreciate you joining us, and we know that we do have a lot of traders who join, and it's not the most pleasant of time of day to be joining us. So we appreciate you joining us, and hopefully you gain something from these webinars. If you do have any questions, please just drop them in the chat box. If they're short questions, if they're longer, we will answer them on air for you. Anna's on MT5. I've got the Ninja Trader running on my side, and we'll just flip-flop between the two. And really, just to echo what Anna was saying, it is, I know it sounds trite, but politics is now the fourth dimension, because it is driving these markets every day in a more volatile and dramatic way than perhaps even the biggest pieces of fundamental data. So sadly, whether we like it or not, we're stuck with it. Politics is here to stay for the time being, and it's just another factor that you have to plan for as best you can. It's not always straightforward, because politics can come out of nowhere. Someone will say something about something or the other, and bang, that's it. It hits the wires, and the markets react instantly. It's not planned, it's not scheduled, it's not like the fundamental data. But we have to be aware of it. We have to be aware of global politics as well. I'm going to pass back to Anna, and we will get going. Lots of yen buying this morning. It's pretty much universal, but I'll pass over to Anna, and I'll keep an eye on it here.
As I said earlier, I just want to try and put together a little suggestion. If you've got the quantum tools, or if perhaps you're thinking about it, or just some ideas of how you could use multiple timeframes with the tools, and also multiple timeframes without the tools. There is a way of there's always a way of trading with or without indicators, both standard and proprietary. But I've just put this together really to highlight a number of issues that we have to try and resolve when we when we come to our machines. If we are, I'm assuming you are all intraday traders, in the sense that you are you will be opening and closing trades throughout the sessions. Now, the first thing I want to say about the sessions is this is a 24-hour market, clearly, but not all sessions are equal in the sense of, in terms of participation levels. And there are points in the 24-hour cycle when liquidity is going to be deeper. There's also going to be more volatility, and there's also going to be more opportunities. The crossover sessions, the reason we hold it at 7:30 is because we've had Europe has already joined. Moves are already underway. Once Europe starts, a lot of the moves start in Europe. Sometimes they're taken up by London, and sometimes the whole thing simply reverses. So you do have to be aware of the differences as the different traders come into the 24-hour cycle. And of course, then we have another shift, if you like, sometimes of complete sentiment, and that is when New York is due to open. I think it's about 1:30. But where do you start? Well, as I said earlier, if there's one indicator, if people ever ask us one indicator is indispensable for trading forex, and I would actually say it is the currency strength indicator. And the reason is because it saves us having the trouble of looking at 28 pairs simultaneously and actually see what is being bought and what is being sold in the different time frames. This is the 30-minute CSI, and there's a reason I've put it on the 30-minute. As I said, to try and find trading opportunities that will, it's not quite scalping, because the objective is to take more than just 3 or 4 pips. It's, if possible, to take double figures, and to be looking to stay in a trade, certainly for a few hours, not just sort of, we're not high frequency traders on these types of time frames. And what we can see here on the 30-minute CSI, as David has said, the magenta line is the yen, and there has been, and it looks to be there be some quite strong buying of the yen. Now the yen is telling us that obviously sentiment is a bit sort of fragile in the broader market. So if the yen is being bought in forex, we know that the markets are are not terribly happy. It's a currency of safe haven, but it's also a risk currency. And what the other lines represent are all the other currencies. Now what we can see here very dramatically, we can see here that this is the this yellow line. This is the British pound is being bought. Is being sold very heavily. So I suppose on first look you would say, well, okay, let's go and see, let's go and scope out the pound yen. Now the pound yen has been a fantastic pair for a trend. You only have to look at the daily chart. It's absolutely being relentless. What it also suffers from is it is hugely volatile, and can sort of it's not called the dragon, right? When you trade the pound yen, there's a saying you are riding the dragon, and there's a reason for that. Excuse me. But what the CSI also tells you, not only does it highlight trades, but it also tells you trades that possibly, particularly if you are a trader that is dedicated maybe to 2 or 3 pairs, it also tells you the pairs perhaps where things may not be happening quite so dramatically. And the reason I've got the New Zealand yen at the moment on my profile excuse me, is because of that reason. The lines really, what you want to see is strong divergence, and you want to see some really sharp angles.
Apologies, Anna's been suffering with a horrible head flu. Goodness knows what's been going on for a couple of weeks. So if there is a lot of coughing, I do apologise. She will try and keep it to a minimum. I'm just going to pass back to her. I think she's okay to carry on. If not, I'll take over.
I think David might have to carry on. So very, very quickly, this is where we start with the CSI. I'll maybe come back to it.
Sorry, I switch over. You can leave it. You can leave it there for a moment. Do you want to leave the screen up?
I'll take it back to you. Is that okay? Do you want to take about the 3 minutes that I was going to talk about?
Leave it there. That's okay.
I'll come back to it.
Can you just put the CSI back up? Apologies. I'm just. Thank you. There we go. Okay, we might switch over to Ninja Trader. But just to pick up on what Anna was saying, the starting point is always the CSI, and it's not only a question of identifying those opportunities which are there and available, but it's also identifying those opportunities to avoid. And one of the examples here, you can see the buying across the yen is pretty much universal across the complex. Obviously, we're aware of the fact that we've got London coming up at 8 o'clock, so we've got the open to deal with. But in terms of a pair that wouldn't be of particular interest, certainly on this sort of time frame anyway, on the slowest time frame, 30-minute, is the Swiss franc and the Japanese yen, simply because the green line, which is the Swiss franc, is rising in line with the Japanese yen. Anna's just flicking them off there for me. Thank you. There we go. Just to isolate out the Swiss yen, there it is. So the trend in that is there may well be a trend purely because the buying of the yen is pretty strong right now. But against the Swiss franc, it's not going to be the strongest trend on the chart, purely because you have the two currencies moving in the same direction. It's as simple as that. There is, in other words, there's no divergence of force. The momentum, the bullish momentum in the Japanese yen is driving that particular currency. The momentum in the Swiss franc is driving that currency. So they are both traveling in the same direction. And the analogy I always use is of two trains on parallel tracks. Leaving a station, they may well be traveling at slightly different speeds. So there will be an element of differential speed between the two. But that will have nothing, it will have a very weak trend when compared to some of the other pairs in the complex, particularly the pound, the Aussie, the CAD, all the traditional yen pairs, and that's the key of the CSI. So it reveals not only those opportunities which are available, but it also tells you which currencies to avoid. Now, in addition to that, what it also tells you is that when a currency is flatlining, is moving across the screen, in other words, it has no strength. The angle of inclination of the currency also tells you on the CSI the strength of the trend, and that's also reflected once you move to pairs in terms of the currency array, where that strength is visually displayed in terms of the array and the 28 pairs there as well. And I've got those obviously on the NinjaTrader we'll move over to in a moment. Sorry, Lang? Yeah, you can do. Probably easier.
I'll see if I can finish what I was saying. Is that okay?
Okay.
Okay, I just want to finish saying what I wanted to cover, and that is the setup that I've got on this particular profile. So I've got a 30-minute CSI. I've also got a 30-minute chart, and the indicators that I'm actually using here from the tools is, first of all, I've got my levels, my Camarilla levels, but the one indicator that that I really want to look at is this one, is the volume point of control, because when the lines are moving in the same direction, what it also tells me is the price is there's no firm direction, and the likelihood is that the price is then going to be oscillating around the volume point of control. And in fact it is, as you can see here, the New Zealand yen went down, now it's come back up. So it hasn't had an opportunity to move away, to diverge from this congestion phase. And we can see here the trend monitor actually goes red, then it oscillates between these three colors, telling us again there is no firm direction. So that gives me the sort of background of the price action on the slower time frame. Now, the faster time frames I have here a 3-minute chart, and again we can see here we did actually have a breakaway from the volume point of control at 71.70. We've had this little move down, which actually represents the first attempt to break away. This is the price action that was in this candle here. So you could argue, well, okay, we haven't got a firm break on the slower time frame, but at least on the faster time frame, we have had a little break. Again, we've had price action around the volume point of control. As we can see here, a lot of oscillation, attempts to break, fake breakouts back into the volume point of control. You can see there was an attempt to break away there. In fact, there was even a reasonable amount of volume under that one, although with the wick to the bottom of that candle, what is it telling you? It probably wasn't going to go in the downward direction because there was buying support coming in. What happened? It went straight back into the volume point of control. Reasonable amount of volume under that candle. And then we have an inverse of this candle where we have a sort of shooting star here. Again, you know, weakness coming in back to there is weakness, but only to the extent that it's back to the volume point of control. Then we did have a break, but it's accompanied with volatility, 2 consecutive volatility candles on high volume on the second one, a retreat to within the spread of the candle, a little bit more selling, but you see the volume that is falling. So we know that it's, you know, we're not in a price waterfall. In fact, we have buying come back in before again. In fact, this is the only bit of this price action which you can say corresponds to a classic waterfall, in the sense that you have falling price, rising volume, and widening spread. But even here we have buying coming in with the wick to the bottom of this candle. Now, this price action is also reflective of the 30-minute, where, you know, although it is within a congestion phase, the range of the candles have allowed a trading opportunity, if you like, to take maybe a few pips based on the price action of the faster time frame. But it isn't, but given it's quite tricky, because it is so contained and it hasn't got a firm direction in one way, in one way or another, as we saw on the CSI, I would say there are probably other, there are other pairs where it would have been easier. It would have, the less risk and a cleaner price action, and move away from as I said, the volume point of control. The ideal is if you have a move away on the 30-minute and it's reflected on the faster time frame, the risk on that trade is less than if the price is still forever moving or breaking away, coming back, moving away, and coming back again. And it's reflected also on the Renka. Now, the Renka doesn't have time. All it is set to a value of the individual individual bricks. In fact, I don't know. Let me see what the value is here. Let's have a look. It's actually set at 1.44. I haven't set this. This is what the indicator has set it to. Now, if you were minded to say, well, actually, I am going to try and take some pips out of these moves, even though I know it's certainly more tricky than normal, what would you have to do? Well, you certainly, look at what the trend monitor is telling you here. It's constantly dipping in and out of the bright colors and the intermediate colors, because it is reflecting the congestion that we have on the 30-minute, and to some extent the 3-minute chart, which is reacting to what is happening on the 30-minute. You do have, as I said, there have been opportunities. There's a small opportunity to the long side here. This was an opportunity here. Why? Because the trend dots and the trend monitor are in agreement. So it's how you feel about trying to trade this kind of price action, which, to be honest, is not easy. So the reason I put up the New Zealand yen was to show that sometimes trading opportunities do exist. Indicators will highlight trading opportunities, but they're not going to be as straightforward as perhaps other opportunities that we will see on other pairs. And what I've also done to finish the profile, which I've moved them because with MT5 you have the facility of what's called docking, and that basically is your charts you can move over to another screen, which you can't do with MT4. And what I have here, I then have complete the other indicators from the currency dashboard, which is the array and the heat map. And in fact, what I've done with the CSI, I've actually put the matrix on the same chart, because what the matrix does, it actually tells me which of the, if it was the yen pairs that I was considering, or which have been moving the most, as it were. And in fact, it's the pound yen, as we can see here. If I push these back, put the one back again, we can see here where have been the strongest moves, and it's certainly been in the pound yen, which has been reflected in the CSI. So if you have the strength indicator and the matrix, then this is what I would suggest you do. You put them on the same chart, and then that would help you pick possibly the best pair to take a trade. Now we could invert this and we say, well, the pound yen is at the bottom. There's been a lot of yen buying, but there's also been a lot of pound selling. So we can simply go and change. There we are. Let's have a look and see what the pound is doing. There we are. Yes, and we can see of all the pound, the pairs that moving on the pound, well, maybe a cable, if you're a cable trader, yep, that seems to be on the move now. And of course up here, selling of the pound against the euro, which means the euro is being bought. So in forex, you're not dealing with a single instrument. You are looking at obviously a pair, you're looking at economies, you're looking at value, you're looking at all sorts of factors that to try and figure out what is actually driving that pair. Is the driver more because it's pound selling, or is it the driver because it's more yen buying? If it's the pound yen, how does that? It's a very multi-dimensional, multi-layered market, which is the reason why it is, we think much more complex than the others. It also makes it more fascinating. Is there anything you want to add to that, David or Azan? Okay. I'm actually going to pass over to David, and we'll see. What have you been looking at? He's actually got the pound yen. I've actually started. I've got a where is it? Pound. I've actually called it pound Renko. Where is it? It's disappeared. Here we are. There we are. And as I said, but we'll look at the pound yen through on the Ninja Trader platform. But you can see immediately the charts are the moves in the charts. As I said, this is the move away from the VPOC again, but much more volatility than the New Zealand yen. I'll move over to you, David. And cleaner, as I said, a much cleaner move, although associated with volatility. But another of the advantages of the Renko is that it does actually help to smooth out that volatility.
Just switch screens. I'll just check on Anna's screen that you can see mine. Yeah, that's good. So you've got the Ninja Trader platform up now. Just move the chat box out of the way. Basically what we're looking at here is we've got multiple time frames. Across the top we've got 1 minute, 3 minutes, all fast time frames, 1 minute, 3 minutes, 5 minutes. Down at the bottom I've got a 15 minute into a 30 minute, and over on the right hand side I've got the daily. And just to make the point, we focus a lot on the faster time frames, not because we believe that scalping is the only way to trade these markets or intraday trading. They aren't. It just makes the changes that are going on, the educational aspect, if you will, a little bit more interesting than if we were looking at hourly and 4 hour and daily and what have you. So that's the only reason. There's no other reason. We get a lot of comments back saying, well, you tend to focus a lot on scalping. That's the only reason why. It's not because we believe this is the only way to trade. It isn't. It just helps to make the webinars that much more interesting, hopefully. Basically, I've got, as I say, I've got the pound up. We've got this reversal going on at the moment, and that's all reflected. If we go over onto, I'm going to walk through the 4 indicators on the dashboard. Just go over to that workspace for a minute. We've got a couple of minutes to London Open. So as always, we're looking for possible reversals, volatility, all sorts of things going on at the session crossover. As Anna said, it is a key area. We're always paying attention through this and into the US at 1 o'clock for the forex markets, and obviously you've got the cash markets opening up 2:30 our time there as well, plus fundamental news at 1:30 generally in the US. So we're always pretty sharply focused at these sorts of times, and what you're looking for are trap moves, reversals. They come in all the time at the session crossovers, particularly London, particularly the US as well. And what we're seeing right now, this is the 5-minute CSI. This is the Japanese yen, very heavily overbought in the run-up, as I mentioned. This is 745. The nice thing with the Ninja Trader is that what it does is it also prints your local time correctly. So it's very easy to pick out where we are within the session. This is 8 o'clock, just opening up London UK time. Whereas it's not so easy on MT4 and MT5, where your reference time is generally a couple of hours out. So it's quite hard to pick things that are going on historically, in other words. But this is us live. This is the 5-minute. We had the overbought, the Japanese yen, very strong at the top here, oversold of the British pound. You can see here it's even more heavily oversold at, so this is 7:15. This is Europe getting underway, very heavily oversold. Then we're starting to see a little bit of buying coming in. So in terms of looking at opportunities, it depends whether you're looking for opportunities at extremes, in other words, reversals, or whether you're looking to jump on existing trends that are already underway. Pros and cons of both. I've covered those in detail several times. Might come back and look at those. But those are the sort of opportunities, and also those opportunities which have no interest. What's interesting, just to pick up on the Swiss yen again, you can see here the green line and the magenta line really following one another around very closely. So all you can infer from that is that there's no trend on that particular pair on 5-minute at any rate, because the Swiss franc and the Japanese yen are being bought and sold equally at pretty much the same time. In terms of other opportunities, we've got the Aussie here was rising, now it's flicked over. We've got the dollar rising very strongly. The New Zealand dollar here is kicked over. There was some buying in the euro. That's flatlining a little bit. Excuse me. Same problem as Anna. Apologies. Over onto the 10-minute, what are we seeing there? Well, we're seeing this selling of the yen starting to appear. Again, you've got the Swiss franc following it. The pound here is flatlining down the bottom, very heavily oversold. Up onto 15. It's just starting on 15, and the pound hasn't actually lifted off the floor for the time being. And that's the issue as a trader. What you're looking for is the time window that you're going to focus on, because what's happening on 5-minute is just a very tiny microcosm of what's going on in terms of a 30-minute or an hourly chart. And a trader who is long on the hourly chart may well be making money, whereas an intraday trader on a 5-minute or even a 1-minute chart is short and making money also. Traders can make money in different directions on the same pair but in different time frames, and really that's what it comes down to. It's isolating out the time frame that you're prepared to trade in, placing that trade accordingly, and then sticking to it and not falling into the trap, which we all do. Let's be honest. We start with a scalping opportunity. It doesn't quite go the way we want, and so we extend our time frame. We go down to the slower time frames, or up, however you refer to it. We're looking at slower time frames. We're looking at confirmation that, well, actually, do you know what? In the slower time frame, I'll probably be okay, because it looks as though it's going to go the way I want it to go, but it's not going in my favor right now on the scalp. We do it all the time. Everybody does. So that's what's going on in terms of the currency strength. In terms of the currency matrix, again, similar sort of thing. I've got 5-minute, 10, and 15. Now, when we started the session, pretty much all the yen pairs were ranked right down here at the bottom. In other words, very heavy buying of the yen, and that is all now starting to dissipate. We're starting to see selling of the yen. You can see it here being led by the Aussie. You've got the Aussie yen up here, the dollar yen's following it, the CAD yen's following it. So there is some selling of yen coming in, certainly on the faster time frames. If we go up to the 10-minute, what you're seeing on the 10-minute is a slower replication of that. You can see the pound yen here is still at the bottom, but you can start to see, again, I think at the start of the session, these were all at the bottom. They're just starting to lift off the bottom. In other words, that selling of yen is now starting to take effect. And these are gradually starting to move up the ranking ladder. Over onto 15, very similar picture. Pretty much down the bottom, but they're starting to split. They're starting to take the pairs off the bottom of the ranking ladder. And exactly the same through stepping on the array. Excuse me, just 1 minute. Apologies, both suffering a bit. Anna, far more than I am at the moment. But you can see here on the array, what the array shows you is not just the ranking ladder in terms of buying and selling, in other words, universal sentiment. And the nice thing with isolating out the yen, which I've done up here, is that in terms of a yen pair or the yen complex, it's very easy to see universal sentiment across the piece, because they all rank either below this midpoint, so they're all either down here or they're all up here. So when that changes, what occurs in terms of the array is you see the sweeping effect of the pairs. If this is a true reversal, a longer term reversal in sentiment, then what you'll see is all these pairs start to sweep up towards the top. And as they move through the midpoint, then they move up towards the top area. And what it also reveals is the strength of trend. So what you can see is the strongest trend, negative at any rate, has been in the pound yen. And these are now starting to weaken. They're starting to change color. The inclination of the line is much less steep. So if this is going to ripple through across the time horizons, again, it's down to time horizons. This is on 10-minute. You can see here, very much stronger still, but it's starting to break up a little bit, like me. Hold on. Back again. And it is just starting to, that sentiment starting to break through the complex as the pairs start to break away from this block that was sitting down at the bottom a little while ago. And you can see it here very much in terms of the 15-minute as well. And what the currency array also delivers in conjunction with that is really a replication, if you will, of the CSI. The CSI gives you a visual representation of when a currency is getting to an overbought or oversold state. And what the currency array does, it presents that in this second ladder, where it gives a flag as to whether a pair this time is approaching oversold or overbought. When they're approaching oversold, then it appears with the darker color and with the brackets, and when they reach potentially an oversold position, then that will turn bright red with no brackets. Same at the top here in terms of overbought and oversold, darker blue with the brackets, bright blue when it's actually reached a potential oversold and overbought position. Let's just go back to the charts and see what's going on. In fact, before we do that, let's just go over to the indices. These are the 4 primary currency indices. I've got them on all the same time frames, 15-minute. Top left is the dollar, top right is the yen, bottom left is the euro, and bottom right is the pound index, which is the latest one we've developed. So what we're seeing right now, this is the selling in the pound. This was the buying of the yen, which has stalled a little bit, and we're now starting to see a congestion phase build in terms of yen sentiment. The Aussie's really, sorry, I beg your pardon, the dollar's really not done very much at the moment. It's pretty much in congestion. There was some decent buying last night, but throughout the Asian session, it's just flatlined, not really going anywhere. And a similar sort of picture for the euro. Quite a bit of selling into Far East Asia, and it's just flatlining in congestion at the moment, so not a great deal going on there. In terms of sentiment, in terms of sentiment, where's that gone? Hold on one moment. There we go. Oops. It's going to be awkward. Bear with me a moment. Just going to pass back to Anna for a moment. Hold on.
Brilliant. I know David can see my screen. He's got this. He's got all these new monitors, and they're causing. Sometimes his Ninja. Is it the Ninja or the GoToWebinar? I think it's the Ninja, isn't it? It hides. It hides what's going on. All fun and games, isn't it? Trading is not stressful at all. It's the technology we have to deal with to do the webinars that's stressful. Okay, thanks for coming back to me. Has anyone got any questions? Let's have a look. Whale music. I know, very good. Fantastic, Mark. I should have to record it and sell it. That'd be quite good. Right. Okay. Where are we here? I actually stayed. I moved over to the pound yen, as we can see here, and in fact, in the crossover session with the opening of the London session, what we've seen here, if you recall, when we looked at this on the 3-minute chart earlier, the volume point of control was up here. This was the signaling the range bound congestion. Traders are sometimes really, they get nervous when prices are range bound and in consolidation. Prices are in consolidation for all sorts of reasons. And in Forex, those reasons can include it's simply perhaps not a pair that is traded very heavily in that particular time zone. So that's one reason. Another reason is because it could be waiting for an announcement, a news release. Another reason is there's just not the liquidity for that particular pair. So, and